This is Money Talks Explains, and I'm Andrea Hing. This is where we have a burning question and we find an expert to break it all down for us. Now, in a world of fluctuating markets and economic uncertainties, investors like you and me are constantly seeking stability. For centuries, one asset has stood the test of time. I'm talking about gold. Is it still a wise investment, though, in today's digital age? How does one even begin to own a piece of this precious metal here in Singapore? To break it all down for us today, we have Shaokai Fan from the World Gold Council. Hi, Shaokai.
Hi.
All right. So gold, as I said, described often as a safe haven asset. Could you elaborate on what exactly that means and why it has earned this reputation among investors?
Well, gold is a safe haven asset because it traditionally does well during periods of market instability or disruption or uncertainty. I think all you have to do is look back at the recent times we've all lived in, pandemics, wars, trade conflicts, etc. Gold has done well during all of them. So it's certainly earned that reputation in terms of its financial performance. But as for why it has that reputation, I think it's a couple of things. A, it's scarce. There's only so much of it, of course, and you can't make more of it. So if you can't make more of it, the price is always going to respond to demand. When there's more demand because of these extreme times, the price will go up. But beyond that, it has no inherent credit risk. Unlike other assets that are an equity of a company or the bond of a government, you have exposure to that underlying risk for those counterparties specifically. And finally, it has no political risk. It's the only asset class that's not issued by another government, for instance. So even if you have, let's say, shares in a company, that share is going to be denominated in US dollars or Singapore dollars. So you are still linked to a bit of that political risk for that country's currency as well. Gold is not issued by any country, so it has no inherent political risk either.
Right. So it's kind of like a constant friend.
Yes,
all the time.
Exactly.
So answer me this then. How does gold typically perform during periods of economic instability or even high inflation when people tend to sort of guard their pockets a bit more?
So if you think back to some of the recent crises we've all lived through, and gold has performed well during all those periods. It's gone up because people were unsure about the future. Markets were very unstable. So therefore, it has proven itself as a safe haven asset. On inflation specifically, during periods of high inflation, gold traditionally does very well because, again, it's scarce.
Right.
You can't make more of it, whereas you can print more money, for instance. During periods of sort of middle range inflation, it may or may not do well. Because historically speaking, we've seen it kind of fluctuate either side. But when inflation is beyond expectations, is out of control, then gold traditionally does very well.
Okay, so here's something you talked about earlier, and that was, the wars in the Middle East, the invasion of Ukraine. I mean, obviously, we're seeing a lot of geopolitical uncertainty in the world. How exactly do events like these international conflicts and trade disputes as well, as we're rightfully seeing, specifically impact the price of gold? I mean, who's behind the counter, who's doing bits on the calculator, who's moving those numbers?
So there are several big buyers of gold. Central banks traditionally are very large buyers of gold. They have gold as part of their official reserve assets. And in recent years, we've seen a lot of buying, both from people you might suspect, like China, India, their central banks have been buying, but also central banks in Eastern Europe, for instance, the Central Bank of Poland, Hungary, the Czech Republic. They've been big buyers of gold recently, too. And I think that speaks to the general level of uncertainty in the world. These central banks are ultimately trying to protect their reserve assets and, by extension, protect the value of their currencies. And they're seeking that safety in gold as a way to do that. So that's one big group of buyers right now.
Okay.
Recently, another big group of buyers has just been institutional investors and ordinary retail investors. We've seen a lot of buying into both physical gold bars and coins, but also gold-backed ETFs, exchange-traded funds, which are typically used by both institutional and also retail investors. So I think in markets like the US, for instance, where there's been a lot of uncertainty, recently there's been more interest in buying gold, and especially in China, the retail investors there have been very keen on adding gold.
So there are certain other factors I've noticed that contribute to the movement of gold prices outside of what we've just talked about. Things like interest rate changes. We know that the Federal Reserve is thinking about cutting in September, for example. But that being said, there's also, the central banks that have diverged from the US Federal Reserve. The MAS, for example, holding on rates while other central banks have cut or raised. So that's a different story altogether. But interest rate changes, currency fluctuations. We know the US dollar is quite weak right now and the yen is coming up. So these two factors, how do they influence gold prices, if at all?
So typically, there's a historical relationship between U.S. interest rates and the strength of the U.S. dollar and gold. It's traditionally an inverse relationship. So when U.S. interest rates are higher, gold traditionally does not do as well. And when U.S. interest rates are lower, gold traditionally does better. The same with the dollar. When the dollar is stronger, gold is traditionally not as strong. When the dollar is weaker, gold is traditionally doing better.
Right.
We've seen that relationship continue to persist, but it's definitely weakened in recent years because there have been a lot of buyers of gold who've been buying gold for reasons completely outside of U.S. monetary policy. I mentioned earlier Chinese retail investors, for instance. They've been buying a lot of gold because other asset classes in China have not been doing well, and the economy overall is slowing in China. So they're not really looking at Fed rate decisions as a rationale whether to or whether not to buy gold. They're buying gold for their specific reasons. That's kind of weakened that relationship between gold and U.S. rates. That being said, the relationship is still there. So if you expect the Fed to cut rates later in this year, that probably will be beneficial for the gold price.
So what about individual investors like me? I mean, is this the time to buy gold? Should I be worried as much as the central banks are and start to look to buy gold?
I think every investor needs to look at the world right now and think about his or her own situation in terms of the risks that are out there on the horizon, the potential opportunities as well that are out there on the horizon. The gold price has done very well. It's gone up, over 20, maybe close to 30% year to date in US dollar terms. But we are still facing a lot of uncertainty out there. The trade situation is still not resolved right now. There's obviously ongoing tensions and wars in various parts of the world. And it just seems like in general, the world is much less predictable than it was 5-10 years ago, for instance. So I think that for every investor, there is certainly a role that gold can play in their portfolios. It's just really incumbent on every investor to examine how gold might interplay with the rest of the portfolio, and then whether or not it's a good idea for them. And then after that, how best to access gold.
Okay. You brought up a very good point right now, accessing gold. So for those of us who might be new to investing in precious metals, could you perhaps give us an overview of the different ways one can buy gold here in Singapore?
Sure. You can, of course, buy physical gold.
Okay.
There are various retail precious metals dealers that sell physical gold.
And these are gold bars and tablets?
Gold bars, basically gold bullion. So it can range from tiny little pieces to maybe pieces about this size.
Right.
If you have the money, you could buy a large bar. That's about 1.3 million US dollars right now.
Wow, just for one of those?
Yeah, you just park it under your pillow if you want, right? Or as a nice paperweight.
Right.
But you can buy that, of course, and that's actually increasingly more common both in Singapore and in many other markets. And a lot of storage facilities are now available in Singapore if you want to store in that secure facility versus storing at home. So that's definitely one way to go about buying gold.
Okay.
But besides that, there are also gold ETFs, exchange traded funds, which are essentially equity instruments. They're funds that buy physical gold and then create shares that represent the value of that physical gold. And the share price of the ETF moves in line with the gold price. So you have exposure to gold that way.
Which is the better option?
It really depends on what you're looking for. Some people really like having the physical metal. And then, of course, you have to consider the premium or discount in buying or selling the metal, the storage cost of the metal if you want to store it somewhere. ETFs are maybe an easier option if you're more used to, trading in a stock portfolio, for instance, because it's essentially just another equity instrument that you buy. However, ETFs do have management fees for themselves too. So do take a look at those management fees, see if it's right for you, compare it to physical gold, for instance, and then make a decision that way.
Yeah, that's good advice, actually. So every time the gold prices come down or go up, depending obviously on what the patterns are, people like my mom will start looking at a date to go shopping for gold, like gold jewelry. And obviously, there are different grades. There's the 916, there's the 14, 18, 21K, so 24K, so on, right? Is that an actual option to buy as physical gold? Is that worth anything?
Gold jewelry.
Yeah.
Certainly. You can definitely buy gold jewelry if you're using it as ornamentation, for instance, for sentimental or personal reasons. As an investment, yes, it is possible to consider it an investment, but you have to take into account the fact that the price that you're paying for the jewelry will be pretty different than the price of the underlying gold itself.
Right.
Because there's the craftsmanship, the
right.
workmanship being put into it, for instance. Each piece of jewelry is distinct and unique. versus, let's say, gold bullion, which is more or less interchangeable. Each piece is unique. So everyone's going to assign a different value to it. It might mean more to you than it might mean to someone else. So there are certainly many people and cultures who do view gold jewelry as an investment, but just take into account the fact that the pricing is going to be much more varied from piece to piece, from time to time, etc.
And when you sell that jewelry, what you get back may be of different values to what the typical gold exchange price would be.
So it's going to be different than the value of the underlying gold because you have all the other factors that we talked about, and whatever other metals or stones are in there as well, right? That's also going to be a factor too.
Yeah, absolutely. Okay, so then in that case, if I'm buying gold for the very first time, physical gold for the very first time, what's the most crucial factor to keep in mind?
One, do you actually think it'll play an important part in your portfolio? I think that gold obviously can play a part in many portfolios, but think of gold as a way to seek a little bit of a counterbalance or a shock absorber in the portfolio. You talked about the fact that it's a safe haven asset and that it performs well during periods of stress and crisis, and it does. But that's one reason to buy gold. Another reason to buy gold is because it has very little correlation to the other assets that you might hold.
Right.
So it's a good diversifier. It has little correlation with most equities, for instance. So typically when maybe the equity market is going down, the gold price might go up, and it could therefore bring a little bit more resilience into a portfolio. So I think those are key reasons to keep in mind when entering gold into a portfolio.
Okay. You talked about how, deciding on how much gold to have in your portfolio. I mean, it's a tricky question. It really depends on your comfort level. But what would you suggest in terms of how we determine that amount? How much weight in our portfolio should be allocated to gold if we have a diversified portfolio?
There's no one single answer to that, of course. I think that there are various different tools out there that can help you analyze an optimum portfolio mix. I think that you can look at a lot of literature on this subject as well. Typically, we find that somewhere between 5 and 10% of gold allocation is probably right for most investors.
Okay.
But it also depends on the composition of your current portfolio. If there's a lot more risk in the portfolio, then maybe a little bit more gold might be better. If it's more skewed towards safer instruments like bonds, for instance, maybe less gold might be better for you.
Okay. Well, thanks for joining me, Shaokai, and more importantly, being our Money Talks explainer.
My pleasure. Thank you.
If you need a finance thing explained, all you have to do is write into us at cnapodcasts@mediacorp.com.sg. Money Talks is available on Spotify, Apple Podcasts, YouTube, as well as Me Listen. This has been the Money Talks Explains. I'm Andrea Heng for the Money Talks podcast.